Being asked to give your outlook for the new year comes with its challenges at the best of times. Normally, you'd look to the global economic cycle and make an educated guess based on the path of growth, job numbers, and inflation. But there's so many uncertainties in the world at the moment that it's almost impossible to make a call. I spoke to 3 multi-asset managers to get their thoughts on the subject. We'll start with Vincent Roberts, co-manager of TBY's Multi-Asset Growth Fund.
Well, our base case is that growth will remain quite robust in 2022. Obviously, inflation, withdrawal of monetary support, amongst other things, will undoubtedly create some uncertainty, but the fiscal and monetary policies are likely to remain extremely accommodative. Despite that background, conditions are likely to be relatively challenging, and I think we can quite comfortably say that the easy gains of the past year, when the tide lifted all boats, are probably behind us. We will thus need to be quite selective in our investments because many parts of the market, be it in equities or credit, are highly valued, and bonds will provide little protection in an inflationary environment. But all of that said, there remain plenty of areas that have lagged the recovery and present strong fundamentals. So the key will be to invest in those and focus on companies that are able to protect their margins.
Anthony Willis, a manager in the multi-manager team at BMO, shares a similar outlook for 2022.
Well, I think our outlook for 2022 is one of solid economic growth. And obviously, that comes with quite a big caveat, of course, but I think the impact on growth is certainly not going to be as bad as it was in 2020 or in 2021. So we think 2021 saw a strong year of growth. 2022 will still see solid economic growth. And so there are still lots of good things going on, but I think the real caveat for us is really the economy is likely to be stronger than the market. And what we mean by that is there's lots of things going on that have been helpful for financial markets, such as the central banks. These things are starting to turn a corner now. So coming off the back of very strong 2021, and indeed financial markets have been doing very, very well ever since pretty much March last year, March 2020. So I think looking forwards into 2022, we see the global economy on pretty sustained, solid growth, but financial markets maybe returns a little bit more subdued.
The only thing I can say with any certainty is that we're likely to be in for a period of volatility. So how does one invest in a time like this? Given the backdrop for 2022, Matthew Stainsbury's co-manager of Close Managed Income thinks equity income is the place to be for 2022.
And the reason I say that is that essentially we think we're going to have some slightly higher inflation than we're used to. We're probably going to be seeing interest rate rises. And so in that environment, shorter duration investments do better, and that's exactly what equity income is. It's, you get your income today, you don't have to wait for tomorrow. It's got the added benefit as well that if growth does slow, you're getting income and it has defensive qualities. So again, it kind of protects you if we get a bit of inflation and we get rate rises, but also if growth disappoints.
Our next video looks at other alternatives for where to invest during uncertain markets. And remember to like and subscribe to be notified when the next video is published. To learn more about any of the funds mentioned in today's video or to get more Outlook content, visit our website, fundcaliber.com, where we have articles, podcasts, and videos on the subject.